Hello, welcome back. And if this is your first time here, you're going to find a lot of videos about home finance, mortgages, and saving money at home. So if that interests you, if you're a homeowner, you're going to probably find quite a few videos here that will appeal to you. So what this video is about is finding a mortgage when you're self-employed. And if you're self-employed and if you've ever tried to apply for a mortgage before, you'll understand that it's extremely difficult when you write off so much legal tax deductions, and then at the end of the day on your tax returns you're showing an extremely low net income. That's typically what everyone's scenario is. However, that's not for everyone. Some people don't take a lot of write-offs, which means if they're self-employed, they might have more options available to them. So I'm going to explain to you what you can do, what your options are as a self-employed person, and then depending on whether you can or cannot qualify using your tax returns. So first, let me take you through what you have available to you. If you are able to provide tax returns and you don't write off too much and you think you have a shot at potentially qualifying for a conventional mortgage. Conventional mortgages was going to be my first answer. Yes, conventional mortgages are available to you. FHA loans are available to you, and there are some FHA guidelines do allow for a much higher DTI than conventional, and there are some lenders that will accept those even over 50% DTI. So you might be in a scenario where you do take some write-offs and your DTI maybe was too high to qualify for a conventional mortgage. You may have been speaking to another lender and they said you can't qualify because you show too little on your tax returns. Well, there could be an FHA lender that might be able to make this work for you. So you might want to look into that. Same thing with VA and USDA loans. You're going to need to provide your tax returns. And if you write off too much for those two programs, you might not qualify. Okay, so there's that. Although VA loans have much higher DTI tolerance. In fact, it's up to the lender, I believe, on that one. So those are your options for self-employed mortgages when you can provide and qualify using the net income on your tax returns. Now, if you cannot qualify using your tax returns, or you just don't have tax returns and you're self-employed, then you're likely looking at a bank statement loan. So I've done another video on bank statement loans. I can link to that down below, or put one a little link up in here on the top right hand side of your screen where you can watch that video. But the bank statement loan essentially requires you to provide 12 months to 24 months worth of your bank deposits, bank statements showing your deposits, and no tax returns are required. Some instances, a lender might ask for a recent P&L statement, a year-to-date P&L from your accountant, but either way, this is a great way to qualify for a mortgage as a self-employed individual. It makes total sense. It uses your deposits, does not take your write-offs into consideration. They do use a percentage of your monthly average deposits, though. But either way, this is the program for self-employed individuals. Everyone's scenario is going to be different. Your credit scores will matter, and it's constantly changing. So the best thing for you to do is check in with us, and we'll let you know what you can qualify for, let you know what your options are. No credit report needs to be pulled to do that, and I'm sure as long as you have meet the minimum credit score requirement and the minimum down payment requirement, this should not be a problem for you. So hopefully this helps. If so, I would appreciate it if you hit that subscribe button. Thanks for visiting, and we'll see you next time.